Alright guys, so in this video I'm going to explain what separates professionals from gamblers, and to do that I'm going to use the example of the trade I took this week and also do a quick weekly review of this week's price action. First of all, we need to understand that markets aren't certain. Every moment is random to a certain point, as the same traders won't buy or sell at the same time ever again. So we can't guess what the outcome will be of any trade. So for that reason, we have risk management, and you should only be risking what you will be okay with losing. So let's get into the example. First of all, we can see that during last week we went straight for this draw of liquidity, and right now we are just making a small retracement. The question here is, will we have a change in the daily order flow, or will we go again for the highs? So let's outline the Monday range and let's drop two lower time frames and wait for price to drop into this daily fair value gap and see the reaction. So with this consolidation, we can see that something is not very settled, right? Also, this was an SMT with euro, and we are closing back above the Monday low, so that's pretty bullish. We also have this H1 fair value gap that was used to make new lows, so let's wait. Right now we had these equal lows on euro. Also, it was an SMT on pound, but on euro it was another equal low. So my first entry was something like this, alright? And now I took some partials around here, and I was looking for a small retracement around here, form a range, take the week low and continue higher till we take this draw of liquidity. So at this point I was waiting for the range to form, and we have here a decent range. We also have the equal low, and my second entry was something like this. I wasn't liking these equal lows very much, but it wouldn't make any sense to retrace to the Monday low again. If we do that, it is likely to take these lows again and the bias will be wrong. So at this point, let's see what happened. We can see that we took the week low, but we weren't able to reclaim this level. So as you can see, we went straight for the lows and we continue dropping lower. At this point, we need to, let's see the euro chart. I want you all to understand in this video that even though this chart was very clean, I'd say one of the cleanest setups we have got in a few weeks, you can always get a candle like this and you are going to take an stop loss. So what happens here? If you are a professional trader, you are going to take the stop loss, move on and wait for another opportunity. Maybe you lost 1-2% of your account, but that's good if you have an advantage and you're profitable. So everything's good. Just another trade of the 1000 trades you'll take during the next months or years. But what happens here for most of you? Well, a lot of people think that only because the order flow is so clear, the Monday range narrative has aligned, and everything looks perfect to take these lows and have a massive win, they can risk more. And what happens during these days is that a lot of people that know how to trade, because they know how to analyze this chart and they know this is a better setup, everything, all right, they take more risk than they can afford. And with that, they blow their accounts, their mentality gets nuked, and what happens is that you will see a lot of days like these ones in your trading career if you are serious. And if you are serious, this will be just another day, another loss, and all good. But if you don't have the right mentality, the right risk management, you think you can know the outcome of a trade, and because it's very clean and H1, H4, daily order flow is aligned, money range narrative, everything you want, bro, you can risk more and win way more. Maybe one day it was well, you make a bunch of money. The market sometimes will let you win even if you are doing shit you shouldn't be doing, and that's the secret to then rob all your money from you. Maybe one day you see that market does this, you risk 5%, you make 15% in one day, huge numbers, but next day you'll see the same setup, maybe you risk even a bit more and you're going to get fucked. Also, maybe after taking this high, we make a good structure and you risk again, maybe let's say 20% now, because you have to recover the last loss. It was a huge loss, your mentality has been affected, and you need to come back to your normal dopamine level in order to feel good. So you risk way more and you again get fucked. And in one single day, you can lose your whole account. And this is what most of you are doing right now. This is not serious trading. This is not something you'll be able to afford in the long term run. And if you really want to make money, I know most of you won't like this, but you need to take it slowly and steady. And these weeks are here to remember us that we can't guess the outcome of anything, and risk management is there for a reason. So take it as a lesson if you did something wrong. My personal example is that most of my accounts ended at break-even thanks to the partials I took here, and some accounts ended as a 0.5, 0.6 loss. So that's a perfectly okay number. I'm glad of losing. Hopefully all the losses will be like these ones. And I know if I take this setup 100 times, I'll make money. But I can't guess if the next 10 setups I take will be a win. And also that's not even my job. My job is to manage risk and take good opportunities that will end up printing money. But I don't have to guess which ones will print and which ones will lose, right? So I hope this was useful and see ya.